Okay, I'm going to tell you what everyone is missing about inflation.
Inflation drops into single digits, but the numbers still exceed all estimates.
While the response from the most important person in the world of finance is hiding in plain sight, which could affect this, and how you will be better off by having an understanding of this. And I'm not just taking the forecast from the likes of the Bank of England as gospel here, there's something different. Okay, so let's go back to basics. Whether you like it or not, inflation is probably the most important topic in personal finance right now. It not only affects the money in your pocket, but it's also one of the key reasons why people are on the picket line, why asset prices declined so much in 2022. It affects everything, all the way up to who the next Prime Minister might be. The thing is, with inflation, even if it slows down, it can still have a really big impact. Because look, inflation is just the change of purchasing power. That's the way to think about it. So when they talk about the annual change in inflation, it's just very broadly the difference between what you paid for a selection of goods last year compared to what the current price is this year. Now, everyone has their own personal inflation rate, which is going to vary depending on where you shop, what assets you hold, and where you live. Inflation is only actually an issue to you if the rate of your income or assets isn't keeping up in line with inflation, because it has an impact of stealth poverty. In fact, if I could say what is the number one thing that a lot of people don't understand about personal finance, is that they're constantly in this battle against inflation. And this is how you've got to think about what you earn and your assets. Because over 1 year, look, if things get more expensive, that's not a problem. But if what you earn and own remains the same value and inflation increases, then ultimately you're always going backwards. And we've got to bear in mind that even if inflation falls, it could still be increasing faster than your income. So in this example, imagine you've got a car who's driving at 80 miles an hour, and then that car then slows to 50 and then to 30. If you, since the start, have only traveled at 20 miles an hour, it's still going to get further and further away in the distance. It's just its speed of getting further away is changed. So the massive question you want to know is, look, is inflation going to come down? Could you imagine a world where it doesn't? And this inflation stuff is a global problem. Look at this data. And in the red is inflation above target, almost globally, with the exception of China. And hey, where to go, Switzerland? You even keeping it neutral with inflation, are you? So anyway, it's a big problem for almost everyone. So I've explained that inflation is the change in the price of goods and services and how that can increase over time. But we also know that it's been really high of late, with inflation due to drop heavily, then in 2024 drop below the baseline of 2%. It's really important to bear in mind that these are just guesses. And in fact, look, let's have a look at the data from January 2020. That weird time before COVID was a thing. Anyway, at that time, they were saying that in 2023, they thought inflation would be somewhere between 0.5% and 5%. Certainly not anywhere near the 10% that we were getting. So I just want to reinforce that this and my own are just educated guesses, and we need to always be mindful of that. The thing that's important to bear in mind when we look at the data is it tells us not a good story about inflation. And I'm going to reference this great paper from Research Affiliates, which refers to US data. And it states that, look, bad news is the history tells us that once the inflation genie is out of the bottle, it can take far longer to return to normal levels than most people realise. In fact, in a study from Havernack and Russell, when they reviewed 198 instances of policy hikes in developed markets, the average lag between a policy rate hike of 1% or more and then the corresponding inflation decrease of 1%, basically from when the hike was from what it was intended to do, was 2 to 4 years. And one of the key questions is inflation actually falling or cresting or accelerating? So when we look at history, this shows us something very concerning. They found that when inflation pushes past 4%, normally due to a supply chain shock or whatever, that 60% of the time it's actually cresting, it starts to fall. So it never goes past that 6% range. The problem is, as inflation rises, the times where it goes from falling to accelerate changes. In fact, in times in history, when inflation's increased past 6%, the cresting after that was the exception, not the rule. So let me show you the data here. And in the red is accelerating inflation, as in it continues to the next threshold, or in the green when it crests and falls back. Now, I want to be clear, this is historical data and it doesn't tell us anything specific about the future, like any data. But what is much more notable here is it also takes much longer for inflation to fall when it goes to the higher levels. If inflation is cresting between 3 and 4%, it tends to reduce in half a year or so. But if it accelerates past 6%, the historical data shows it takes a median of 7 years to revert back to 3%. Okay, so that's a lot of data. And for me, look, my personal view is I don't think we're going to have accelerating inflation from here. Look, we're already starting to see that fall already. And in fact, I think that some of the historical times where it did increase further are for countries which experienced inflationary spirals. I do think the data on how long inflation lasts after the spike above, say, the 2% central bank target is really notable. So hey, just before I continue on this video, please do consider subscribing to the channel. Look, it lets me know this is useful, it gets more stuff out to good people like you, and obviously it motivates me to keep going, so I would love to have you on the journey. So what is the conclusion here? Well look, the data shows us that once inflation has increased to the level that it did in 2022, it would be a significant historical outlier if it fell quickly. All right, the famous investor, a guy called Howard Marks, came out with a recent blog called Sea Change. And he's talking about a sea change as far as an environment shift from ultra low interest rates and almost no inflation to the one where we could be facing in the next decade, where we're seeing much higher inflation. Well, there is something hiding in plain sight here, and it focuses around this guy. This guy is Jerome Powell, and you probably recognize him if you're watching this channel, because it's the finance channel. He is probably one of the most important people in global finance right now. He's the chair of the Federal Reserve in the US. Understanding him might give you an idea of where we might be going. So to tell you about that, I also need to introduce a guy called Paul Volcker. Now, Paul Volcker was a really important guy in the 1970s, because in the 70s, the US faced severe inflation that had been building up for years. Inflation rate had skyrocketed to double digits, somewhat similar to now, and economists were struggling to come up with a solution. Anyway, enter Paul Volcker, who became the chairman of the Fed in 1979. He had quite a bold idea, basically to use monetary policy aggressively to curb inflation, even if that meant raising interest rates to historically high levels. This was a real dramatic departure from the prevailing consensus at the time, which believed that inflation would have to be controlled through government spending and tax policies alone. Anyway, Volcker's strategy was to restrict the money supply by raising interest rates really quite aggressively. And the idea is this would make borrowing more expensive and slow down economic growth. It was a pretty risky move. In spite of that, Volcker persisted, convinced that the long-term benefits of bringing inflation under control would outweigh the short-term pain. The policy was implemented in a series of steps over 7 years, and it had a significant impact on the economy. The Fed raised interest rates to over 20%. Imagine that. And that had a chilling impact on borrowing and spending. But it worked. Inflation gradually started to come down, and by the mid-1980s, it was back to more manageable levels. Here's why you should care so much about that. According to Forbes, when Powell became Federal Reserve Chair in early 2018, the former attorney and long-time investment banker began carrying around a memoir by Volcker called Keeping at It, The Quest for Sound Money and Good Government. Powell was actually reported to say, I actually thought I should buy 500 copies of the book and just hand them out of the Fed. Now, 2 months just before Volcker passed away at 92, he said, look, I didn't do that, but it's a book I strongly recommend, and we can all hope to live up to some part of who he is. So what I'm saying here is, look, this isn't too difficult to work out. If we are faced with a position of persistent inflation, do you think Powell will decide to cut rates quickly, or will he follow the same path as one of his heroes? So let's bring this all together. Look, I think we are in a different environment with inflation. Yes, it probably will come down. I'm just not convinced it's going to go back to how it's been in the last decade. But in my view, whether we're in a higher inflationary environment or a low inflation environment going forward, the medicine is the same. We need to invest in real assets which can over the long term give us above inflation return. Inflation can and does destroy wealth, and all of history shows us that investing in a diverse mix of the best companies in the world gives us the very best chance of beating it over the long term. And if we ask ourselves quite difficult questions, as in, are we in a different environment now? From one that we saw last decade of pretty much free global trade to pushing back against globalization, where countries are having to be a lot more tactical about their supply chains. So what do you think? Do you think the Bank of England are right and we're going to see a heavy inflation fall? Or is there a huge inflation mistake lying in plain sight? Let me know in the comments.